Hello, this is Matt on the Moon Lambo channel. We haven't gotten approval of a spot Bitcoin ETF, but still, crypto markets going crazy today. I'm sure you've heard by now, Bitcoin over $47,000. And this coming on the heels of a thread on social media platform X from Kim Jong-Ginsler this morning, who actually, I mean, the thread itself, it's a warning about basically fraud in crypto, so on and so forth. It kind of sounds like run-of-the-mill stuff from Ginsler. But the fact he's putting this out right now, and he suggests, if you're going to purchase, it's interesting. I'll show you towards the beginning part of the video, but a lot of people, me included, are assuming that the reason he's writing what he's writing now and the way that he worded it, he's doing that because the spot Bitcoin ETF is imminently going to be approved. That's what I think. And, the markets have responded. His thread, over 23 million views in hours. So it looks like this may have done something to the market. May have done a little bit something, but also we got to talk about some additional stuff having to do with this because look, it's going to be a lot of fun. It's been great for altcoins today too. By the way, XRP up 5%, Solana up over 9%. I'll show you in a second, but you got to kind of wonder how much money's actually going to flow in. And there are some experts that think it's going to be way more than what a lot of people have been anticipating, which would have a material impact on the price of Bitcoin, they believe anyway. I'm still standing with my for fun guess that this is going to be a sell in the news event after price does pump upon the news breaking. But we'll see what happens. And then there's a question of what's this going to do to Coinbase? There are people that actually think that this is going to hurt Coinbase's business. I'm not convinced of that, but we'll talk about it. Before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Now, I'm not going to focus a whole lot on price of various assets, XRP, Bitcoin, etc. in this particular video. That's a topic that deserves its own video. But I will note that this is quite the green market. I mean, for those of you looking at the screen on the right here, look at the 24-hour price action. It's just green, 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 almost everything. And some coins buy a lot, frankly. But here's the big news right here from Cointelegraph. Gary Gensler issues warning on crypto ahead of potential spot Bitcoin ETF approval. United States Securities and Exchange Commission Chair Gary Gensler posted a thread on social media platform X, formerly Twitter, as many asset managers await the final word on approval or denial of their spot Bitcoin exchange-traded fund applications. In a January 8th X post, Gensler called on crypto investors to keep some things in mind without specifically mentioning a spot Bitcoin ETF. According to the SEC chair, asset managers may not be complying with federal securities laws by offering crypto investment vehicles, and crypto can be exceptionally risky and often volatile. And so I'll just go to the actual thread here. And as you can see at the time I'm recording this, 23.7 million views. And for anyone that's curious, it is currently 5:28 p.m. Central Time. Monday, what the hell day is it? It's the 8th. Monday, January 8th, 2024. And I'm telling you, like, these views racked up quickly. And so here's what he had to say. Some things to keep in mind if you're considering investing in crypto assets. Those offering crypto asset investment/services may not be compliant with applicable law, including federal securities laws. Investors in crypto asset securities should understand they may be deprived of key info and other important protections in connection with their investment. Investments in crypto assets also can be exceptionally risky and are often volatile. A number of major platforms in crypto assets have become insolvent and/or lost value. Investments in crypto assets continue to be subject to significant risk. Fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams. These investments continue to be replete with fraud, bogus coin offerings, Ponzi, and pyramid schemes, and outright theft where a project promoter disappears with investors' money. So folks, if Kim Jong-Ginsler would just go after those bad actors, the Ponzi creators, so on and so forth, we would applaud what the SEC does. I mean, Gary Gensler met with SBF, I think 2 or 3 times before the FTX Ponzi collapsed. Like, we would be perfectly thrilled if that would be the case here. But setting that aside, what he wrote in this first portion of the thread, he said, some things to keep in mind if you are considering investing in crypto assets. I think that's why a lot of people, including myself, are thinking, well, that's interesting that you'd word it like that. Has he ever worded anything quite like that? If you're going to, instead, in the past, he'd just say, maybe don't do it. I mean, so he's, in some ways, this is a run-of-the-mill warning from Kim Jong-Gensler. But it's that first line that I think have people going, Now, of course, there have been so many leaks from people that are in the know that it's like a 99% chance that the spot Bitcoin ETF is getting approved. The market is well aware of this. And so here you can see the Bitcoin chart. This news broke. It was 9:40 a.m. Central Time. So you can see it was right here. And the market didn't immediately respond, but shortly after there, man, it was off. So it'll be interesting to see to what degree it keeps riding. And it was also funny. Attorney Bill Morgan responded to me sharing this information on X, and he noted that at the time there were only 12,000 likes. So think about that. And so there are now over 23 million views, and now there are 13,000 likes. That's it. On 23 million views, that's it. This is probably his most viewed post on X ever. That would be my guess. Take a look at this from James Seifert, one of the Bloomberg guys who's been covering all of the Bitcoin ETF stuff for months now. It's him and Eric Balchunas that are getting all the attention, and rightfully so. They have sources, they're in the know, all that jazz, and they've done a great job covering all of the developments here. And so here's one of his updates from just several hours or so ago. The 19B4s from Friday after market close are pouring onto the SEC website as I type this. This process can take typically a few days and up to 2 weeks. Yet another sign of what we already know. The SEC is accelerating things for this week. Look, I gotta admit, it's been pretty fun seeing the price action today, and this is without the actual approval coming up. People are just ready, and this is gonna... I will not be surprised to see the price rocket higher, but I still think it's going to be a sell the news event. But it always happen to be wrong, but whatever. Then there was this from Eric Balchunas. Again, he is a senior ETF analyst for Bloomberg, the other guy I was just mentioning a second ago, who is certainly in the know and has sources, so on and so forth. And he wrote the following. GBTC traded close to $500 million today, which is more than 99% of the 3,000 current ETFs. And reminder that they are bringing a volume gun to a knife fight if they launch with everyone else. That said, the 1.5% fee will act as a repellent. Another fascinating subplot. Yeah, and so this is another thing I wanted to highlight here, because this will be interesting to see how this all plays out. But, the fee structures are somewhat all over the place. I mean, in some ways, it's a race to the bottom, which is dangerous because, if you're, no matter what your industry is, if you're in a price war, that's not necessarily fun. There has to be a way to make money from this stuff, and there's concern, which I'll highlight in just a second here, that perhaps these firms, if they could be offering these services at a loss, and then you got to kind of scratch your head going, okay, well, if they're doing that, why, how, what does that mean? Is there additional risks? So more on that in just a second here. There's also this post from Eric Balchunas this morning. He wrote, damn, the fee for BlackRock's Bitcoin ETF will be 0.3% as per their just filed S1. This is much cheaper than I predicted. Life just got a lot tougher for everyone else. The ETF Terradome is no joke. It's actually a bit more intense than that. Somebody corrected him. Katie Greifeld, who's also, she's with Bloomberg, right? I think that this is Bloomberg. Yeah, that's Bloomberg. So she corrected that and said 0.2% in the first 12 months or until $5 billion. 0.2%. Why not just free? And so he said, good catch, Katie. BlackRock fee will actually be 0.2% for the first 6 months or $5 billion, then 0.3% after. I just woke up, so by the way, my brain isn't used to this kind of jolt first thing. Fair enough. That's cheap, though. That's cheap, son. James Seifert wrote the following. Update. Grayscale submitted their updated S3 and are only dropping from 2% to 1.5%. It seems there's a clause about the ability to waiver fees, though. So even if that's the percentage, they may still attract business by waiving fees, apparently. Interesting. Then there was this from Eric Balchunas. But wait, ARK just dropped their fee to 0.25% in an S1 filed 20 minutes after BlackRock's. Told y'all the fee war would break out before they even launched. And this is with out Vanguard on the mix. Damn. Yes, so, and look, and I highlighted why this is crucial. It's because when you launch an ETF like this, you know, you want to gain as much market share as possible as quickly as possible, because whoever wins and gets the big share, history shows that typically if you get, once you're at the gate and you're the winner and you get the biggest share, data shows that as years and decades pass, you maintain that lead. And so you can imagine over a span of decades the degree to which those fees would be impactful. So if they're losing a bunch up front or not making much money, they may not care. They want to get the biggest market share possible right out the gate. And then and then fee structures, they can change over time. And once you have customers, like this is it's normal business. You know, you lure in customers with very attractive pricing, and then over a span of years, you just kind of nudge it up a bit. That's pretty much it. But there was this warning from Caitlin Long, and she's the founder and CEO of Custodia Bank. When fees are lower than costs, please, please, please ask yourself how the asset manager is making money managing the fund. With no fee funds, the answer is usually securities lending, a practice that can pose a lot of hidden risk to investors. What's really going on here? And so look, I don't know. I'm glad she's asking. If it is the case that in the short term, these firms are willing to just take a loss and then hope to make it up later on, maybe that's the case here. But if there is something else that adds risk to this whole structure, if it's found to be the case, of course, I'll be reporting on it. Then there was this from James Seifert. This is interesting. Talk about this is why, like, I want these people to be right there talking about crazy volume out the gate, because this will be great for my net worth. I'm not convinced it's all going to happen at once. I'm really not, but some people are. And so I would love for this to be correct, honestly. I'd never be more happy to be wrong in my entire life. But take a look at this from James Seifert. We just had, is it Reggie Brown? Yeah, Reginald Brown on the show say that he thought initially Bitcoin ETFs would trade up to an 8% premium above NAV initially. That's net asset value. Genuinely shocked. Reggie is a very experienced ETF market maker, not some random talking it. And so, my friends, if that's happening, it would imply incredible demand. At 8% premium, what do you think that will ultimately do for the supply and demand dynamics of Bitcoin? Because Bitcoin underlies all of this, actually, too. So I understand it would be based on demand for the ETF itself, but this is all interconnected, obviously. This is going to get bonkers if this is true. Then there was also this. Gaber Gerbox, founder of Pointsville, strategy advisor, Tether, and Van Eck, he said, it costs less to hold a Bitcoin ETF for a year than a single trade on Coinbase. 40 to 60 basis points versus 25 basis points for a retail-sized trade. The ETF Terror Dome has arrived, as Eric Balkunas would say. So that is an interesting point, though. And so Eric Balkunas says, will be interesting to see if crypto exchanges respond with their own fee cuts before it's too late. Folks, I gotta ask you, do you really think that Coinbase is going to be taking a hit from any of this? I find it hard to believe. I could be wrong, but I'd kind of be surprised if Coinbase felt any pressure to adjust their fees, because the types of people that are going to be purchasing the ETFs, they're not the type of people that would have Coinbase accounts. And the people that do have Coinbase accounts, I'm willing to bet they're less likely to be interested in an ETF, because then you hold the ETF, you don't hold the Bitcoin. You hold the ETF. And yes, I understand, of course, there's Bitcoin underlying it, so you have exposure to the asset class. But, I mean, do you just want to have something that is a derivative, or do you want to hold the asset yourself? I think the people that are already in crypto right here, right now, me, you, everybody listening, my guess is that we're not, like, I'm guessing that almost none of us are going to be interested in holding a Bitcoin ETF. I could be wrong. I have zero interest. I can't imagine I'd ever own any sort of crypto ETF, because I want to hold the assets myself. So we'll see here. But then that's why I say, if that's the case, I don't care what the fees are. I have no interest whatsoever in holding the ETF just because fees are cheaper. I want the asset, not the ETF. That's me. But again, there's all sorts of people who don't want to get on Coinbase, so there's definitely demand for the product. I'm just saying I'm not the target audience, and I'm willing to bet most of you listening aren't either. I could be wrong, but that's the way I look at it. So anyway, it's going to be fun. There's going to be fireworks. I'll have another video out in a little bit, because I got to talk about what's happening with price action and the impact of this on XRP specifically, because I think it's going to be absolutely crazy. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!